Good morning, traders. Welcome to today's market review. This is Fred Razak at CM Trading. Today is April 14th, 2017, and today is Friday morning. So looking at the economic calendar today, just really one thing later on today coming out of the United States. It's coming out at 2:30 South African time, and it's a CPI number that's coming out. So just keep in mind that this is coming out later today. So that's on the agenda. Now, we spoke about CPI numbers yesterday in the webinar and how important they are. So this is a high impact number, so just keep it on your radar. But let's look at the chart. We're going to start here with the Dow Jones. Dow Jones taking a big turn downwards this past week. And we saw it trickling down, and I mentioned it before, and I said, you know, it doesn't have so much lackluster, and then we broke this 20,465 yesterday, and we're trading at 20,409. Now, there's not much of a support level that we can refer to at these levels, but as you can see, we've been trading, you know, just below this 20,659-ish level. This became like a really strong resistance point, and now we're just receding. The real next support level, I would say, is 20,110-ish level, okay, which is way further down. It's another 300 points. We might see that as, you know, this does correct itself, but I think we're going to, you know, somewhat maybe bounce a little bit as we've seen many of the other symbols bouncing this past week. Let's look at the Aussie USD. Just as we're discussing bouncing here, we bounced off this low of 75. We mentioned this the other day that this was a support level of 75.042, and we're trading 75.71. Okay, so that was a pretty decent bounce right here. We broke this last week, remember, with the rate decision. And we're just, you know, this is called reaction and the action to the reaction, okay? And, you know, this is a classical sense where we're trading within the range. On the larger range, 0.77 to 75, but on the shorter range right here between 76 to 75-ish level. So, you know, we can anticipate it maybe coming back to this level and saying it there. So just keep an eye on this as well as we do make a correction. Looking at gold, still pretty strong at 12.87. Obviously what's going on, the unfolding unrest in Syria, and you know what's going on with, you know, the United States and Mr. Trump and the head of North Korea, excuse me. So this is also unfolding, so keep an eye on this. If we do break higher, 13.05 I believe is the next resistance level. Okay, that would be my next resistance level, but let's see if we do close that in. That's only 18 points away, and this has been really a tremendous trade, okay, since December 25th, since the winter. We've really seen this take off, so keep an eye on this as this develops. Looking at the USD CAD, now this is another bounce that we just talked about, where we saw it sold off sharply, okay, with the rate decision earlier this week, and then boom, coming right back up. Okay, so Canadian dollar is still relatively weak. It looked like it was going to get stronger and maybe hit 130, but as you can see here, it's not. Okay, and it's just trading right back at this 133-ish level above. So keep an eye on how this unfolds further. Let's see if it's going to be trading within this range of 133.20 and 132.98. So these are things you got to keep on your radar as things unfold. Looking at the Euro USD, we're really quite weak. We sold off from this 107.79-ish level to 106.15, and we're just trading in this range. Okay, we bounced a little bit, 60 pips, and we retraced right back 60 pips yesterday. But you know, obviously, you know, these things do happen. This mega move yesterday was a case in point to fundamental trading, where we mentioned that, you know, anytime Draghi speaks or so on and so forth, and this is what happens. Okay, this is some things that we can't control, you know, and you can control it in terms of, you know, the reactionary move, but it's very hard to get into it before it actually happens to anticipate such a move. We're not prophets, and we're just looking for the edge. So in such a situation, you could have you know, saw that it didn't break higher over here, and you see a correctional move from 106.70, and it retraced back to 106.15. That's about a 55 pip move, so it's not a bad retracement, okay, all in all, to take out of the market. This is Fred Razak. I want to wish you guys a great weekend. Thank you.